Less than 24 hours after the Fed raised rates, central banks in Europe followed suit, also slowing their pace of hikes, though. In line with the Fed and the Bank of England, the President of the European Central Bank says it should not be seen, though, as a sign that they've stopped trying to fight inflation in the Eurozone. Eum Ji-young reports.
The European Central Bank hiked its borrowing costs by 50 basis points, slowing down the pace of increase, but pledged to keep clamping down on inflation. The bank on Thursday raised its interest rate on main refinancing operations by half a point, taking it from 2% to 2.5%. Although it's less than the successive hikes of 75 basis points made at its last two meetings in September and October, it's the fourth time in a row the ECB has raised interest rates. ECB President Christine Lagarde said that the bank expects to raise rates further based on an upward revision to the inflation outlook.
We judge that interest rates will still have to rise significantly at a steady pace to reach levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target. Keeping interest rates at restrictive levels will over time reduce inflation by dampening demand and will also guard against the risk of a persistent upward shift in inflation expectations.
Consumer prices in the Eurozone last month rose by 10% compared to the same period the previous year and a 10.6% increase in October. The ECB forecasts that the bloc's average inflation will record 8.4% this year and decrease to 6.3% in 2023. Lagarde signaled that borrowing costs would remain restrictive as the bank expects its 2% medium-term target to be reached in 2025.
With inflation expected to decline markedly over the course of the year, inflation is then projected to average 3.4% in 24 and 2.3% in 25.
She said that the war in Ukraine and ongoing high energy and food costs remain a significant economic risk. Also, further slowdown of the world economy could be an additional drag on the European economy. The Bank of England on Thursday also raised its key interest rates by 0.5 percentage points, marking the 9th consecutive raise, followed by the U.S. Federal Reserve's rate hike this week. Similar to the ECB, the Bank of England's decision brings its rates to the highest level since 2008, but the institution advised that further monetary tightening policy is likely. Eum Ji-young, Arirang News.